Welcome, my friends. In this video is the decline over for Xcn coin. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the overall structure of the chart, we can clearly see the presence of a prominent downtrend that has been in effect for a long time and has been guiding the price movements. This downtrend line has failed several times in the past, and after each contact, we have observed that the price headed back down as selling pressure came into play. This indicated that sellers were strong and buyers were not able to exert enough pressure. However, current developments give promising signals that there may be a significant break in this outlook. Especially when recent price movements are analyzed, it is noteworthy that the price has started a clear attack towards this falling trend line again. Unlike past contacts, this move is much more decisive, strong, and volume supported. This indicates that a different psychological perception has emerged in the market, and investors' expectations that the trend may break are rising. This is because repeated contacts to a trend line usually indicate in technical analysis that the level is weakening and a breakout is imminent. In this context, the fact that the price is approaching this level again suggests that this downtrend is reaching its final stages. There is also a well-known rule in technical analysis. The more a resistance is tested, the more likely it is to break. Right now, the price is trying to touch this level again. But this time it's not just touching it, it's trying to break it and settle above it. If this effort succeeds, and the price manages to break above the downtrend, it would be a very strong technical signal. Because this would be one of the most important signs that the downtrend that has been suppressing the market for a long time is over, and the market can now transition to a new uptrend. Although such trend breakouts are usually followed by short-term corrections, as long as the breakout is permanent, the price will move towards its new targets. Moreover, such breakouts directly affect investor psychology. Because during prolonged downtrends, many investors are cautious and hesitate to buy. However, when this trend breaks, confidence suddenly returns to the market and buying gains momentum. This can cause the price to move up much more strongly. In conclusion, although it is clear that we are still in a downtrend, the current price behavior suggests that we are nearing its end. The fact that the price is so strongly approaching this resistance line signals that this level could now be breached on a permanent basis. If this resistance is broken to the upside in the coming days, and the price is able to hold above this level, this will be a very important and positive technical development. In this way, we could see the start of a new uptrend in the market, but we need to look not only at trends, but also at other metrics. Stay tuned. When we analyze the chart in detail within the framework of Elliott wave theory, we observe that the first wave has been completed quite clearly so far. This first bullish wave is extremely important in terms of signaling a new direction in the market, because the first wave is usually the harbinger of the beginning of a new trend by ending the previous stagnant or bearish movement of the market. In particular, the fact that this wave has formed decisively shows that buyers are starting to take control and the market is preparing for a new momentum. Initial moves like this are often watched carefully by traders because at first, many may find it difficult to tell whether this is a correction or a true reversal. However, the structure observed here confirms that the first wave has clearly formed and a change of direction has begun in the market. Now all eyes are on the formation of the second wave. According to Elliott theory, the second wave represents a correction that comes after the first wave and is usually a period of profit realization by investors. This correction can always be more horizontal or gradual downward. In the current situation, it is possible to say that the price has not yet completed this correction and we are in the second wave. However, it should be noted that this process is a very necessary step for the price to regain strength in a healthy way. Because the main purpose of the second wave is to eliminate imbalances in the market and to consolidate the ground before the third wave. In other words, this correction process is actually a positive development in the long run. In this context, Fibonacci retracement levels come into play to determine the points where the second wave may end. The Fibonacci tool is an extremely widely used tool in technical analysis and is very successful in predicting where the price may react. The 0,618 and 0,786 levels are particularly noteworthy here. These levels have worked as important support points many times in the past, and the price has been observed to react strongly from them. If the price declines to these levels and forms a base here and starts an upward movement, this will clearly show us that the second wave is completed. Moreover, a bullish move from these levels would also confirm the start of the third wave. And the third wave, it is known as the most remarkable part of the Elliott wave theory, and the one with the biggest gains. because the third wave is a period when both investor confidence is at its highest and interest in the market peaks. Usually this wave goes far beyond the first wave and pushes the price up rapidly, if the second wave is completed in a healthy way and the price turns up again. This time we may witness the beginning of a much stronger and permanent rise. But first we need to see the second wave. As I said, RSI, the Relative Strength Index, is one of the technical indicators that is highly influential in the decisions of market players. This indicator not only shows whether the market is approaching an overbought or oversold area, but also provides strong signals as to whether the trend will continue. The 50 level of the RSI is considered the most critical threshold of this indicator. This is because it is the border zone where bullish and bearish trends diverge. Currently, we see that the RSI is above the 50 level, and this is a very positive development. Why? Because when the RSI is above 50, it means that the market is now under the control of buyers, and the bullish momentum is strengthening. Especially after hovering below the 50 level, breaking this level up again is a clear indication that buyers are coming on strong. To put this into perspective, as long as the RSI remains above 50, price movements are expected to be upward. This is not just a momentary or short-term move, it can also be a harbinger of a larger trend. In such scenarios, confidence usually returns to the market and investors become more optimistic, which can lead to buying pressure. Given the importance attached to the RSI, especially by large traders, a position above 50 is a supportive sign of investor confidence. In addition, the RSI remaining consistently above 50 may indicate that previous declines may be temporary and are in fact a correction. This suggests that the price has formed a floor, and it is highly likely that a new bullish wave will start from this floor. As long as the RSI remains above 50, the momentum in the market will remain upward, which is an important sign of a healthy continuation of the trend. In conclusion, the current position of the RSI above the 50 level paints a very positive picture in terms of technical analysis. If this situation is maintained, bullish movements can be expected to continue. RSI indicator should also be followed. The falling channel structure observed on the chart is a very distinctive technical pattern, indicating that the movement of the price is subject to limited fluctuations and corrections in a certain direction. Falling channel structures usually define the current direction and the area of movement of the market. As a result of the balance of power between buyers and sellers, such patterns signal a period of compression of price movements based on upper and lower boundaries, with recurring movements within these boundaries. In a way, the falling channel pattern can also signal that the trend may continue for some time, but it is also important to note that the price has the potential to break out of these channel boundaries at any point. Price action is currently hovering right around the middle band of the falling channel, where there is a clear attempt to hold on. The mid-band is a region where the price is trying to find equilibrium within the channel and has equal potential to move in either direction. This is a critical support and resistance zone in technical analysis, as a break above or below this level can provide important clues about the overall direction of the market. When the price tries to move towards the upper part of the mid-band, it means that buyers are gaining strength in the market and momentum against upward movements. This indicates that the market is attempting to break the boundaries of the downtrend and could be the start of a potential uptrend. If there is a sustained close above this mid-band, it could be extremely positive for technical analysis. Because if the price breaks this level and holds here and moves towards the upper band level, it could mean that the uptrend gains momentum. If the uptrend continues in this way, it increases the potential to cover the distance to the upper limit of the channel. If the upper limit of this channel is reached and broken, the market could experience a significant bullish period in the short term. Technically, this would be an important signal that the price is breaking out of a downtrend and starting to move into a longer-term uptrend. Such breakouts are usually very positively received by buyers and start a new momentum gain in the market. The price's effort to move towards higher levels after the middle band within the falling channel can actually be considered as the beginning of a long-term recovery process. Because reaching higher levels from the lower band of the channel, that is from its lowest level, signals a strong recovery movement in the market. This indicates a situation where sellers' pressure weakens and buyers start to dominate the market more. These movements are carefully watched by market participants, because if the price is able to make such holds in the middle of a channel, it can be a harbinger of a broader bullish wave. And when it reaches the upper band, if it breaks the upper band, the price makes a bigger rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.